What is a contract for deed? Have you ever wondered how some people manage to buy property without going through traditional banks? One way they do this is through a contract for deed. This arrangement allows buyers and sellers to engage directly in a real estate transaction without the need for a third-party lender. It is also known as an installment purchase contract, installment land contract, or bond for deed. In this setup, the seller acts as the financier, allowing the buyer to make payments over time. Let's break down the key components of a contract for deed. First, the agreement terms are essential. The contract will specify the purchase price, down payment, monthly installments, interest rate, and the duration of the payment period. These details are negotiated between the buyer and the seller, which can provide more flexibility compared to traditional mortgage agreements. Next, let's talk about ownership and possession. Once the buyer signs the contract, they can take possession of the property right away. However, they do not receive the title until all payments have been made. This means that the seller retains legal ownership until the contract is fully satisfied. Now, during the contract period, the buyer is responsible for property taxes, insurance, maintenance, and repairs, even though they do not yet hold the title. This is an important aspect to keep in mind, as it places the onus of property upkeep on the buyer. From a real estate investing perspective, contracts for deed can be beneficial for both parties involved. For buyers, especially those who may not qualify for traditional financing, this option provides an alternative path to property ownership. For sellers, it can attract buyers who might not otherwise be able to purchase the property, potentially leading to a quicker sale. However, it is important to note that contracts for deed also come with risks. Buyers may have less consumer protection compared to traditional mortgages, and sellers risk not receiving full payment if the buyer defaults. Therefore, it is essential for both parties to carefully negotiate and agree on the terms to ensure a mutually beneficial arrangement. Understanding contracts for deed can help investors navigate unconventional financing options and potentially expand their portfolio by acquiring properties that might not be accessible through traditional financing channels. So, if you are considering a contract for deed, make sure to weigh the benefits and risks carefully to make an informed decision.